Hey everyone, it's Mike Baltos, and welcome to the Orderflows Market Analysis for October 2nd, 2017. And, what a day it was. It was a new high in the Dow. We reached 22,557. And the big news, I think, was the ISM manufacturing report. It was actually one of the strongest on record, and it contrasts with the more moderate results from the PMI. So, construction spending rose in August, but there was sharp weaknesses in the downwardly revised July edition. But nevertheless, a nice up day in the S&Ps and some nice trades to be had with order flow in the 5 years, in the bonds and Eurocurrency. It's basically all over the place. There's nice movements today. So let's just jump into it. But before we do, a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. As usual, the tools in this presentation that I use are the Order Flows Trader Volume Footprint Chart, which is my version of the footprint chart, and the Delta Scalper and the Price Rejector. Within the order flows trader, there are other indicators programmed in there. One of them is the ratios and divergences, and I'll talk about that today. So let's take a look at the 5 years here. Let me get the chart up. Okay, so 5 years, coming into the morning session, after about 7:30, we started rallying, making new highs on nice, strong positive deltas, 2,000, 3,000, 5,000, 3,600. You get up to this high right here. You've got divergence, so you got negative delta. You've got a bearish ratio indicating price rejection up in here with the ratio of 59.72. And that's the trade right there, ratio and divergence. I talk about this pretty much in almost every single video that I do on these trade recaps I show you. And again, I'm showing you the same market so you can see how regularly they appear over time. So if you're not using ratios, you're not using divergences, or you're not using order flow in your trading, honestly, I think you're leaving out a great form of analysis in your trading. Number came out, selling came right in here. You got this bar here. You got this, some stopping volume up in here, 2100, 1671. You got selling imbalances here on the way down, but this was the signal right here in this bar. You got this is happening at 847. You see how the market sold off. You get down here, you've got another sign of price rejection. You got the point of control towards the bottom. You've got the Delta Scalper giving you a buy signal, and the market shot up here. And then this was a 3 in a row. You didn't get the pullback on the entry, so you don't get an entry on the 3 in a row here. Eventually it failed. Anyway, Delta Scalper gave you a little sell here, but not much. The rest of the day you just sort of range bound going into the close and into the evening session. But this was the trade right here. You got your ratio and divergence right on the high. That's it. I could talk about it till I'm blue in the face. People are probably tired of hearing about it, but it's there every day. Now I'm going to show you the other version of this trade, and it occurred in the bonds. It's the ratio and divergence, but where the ratio comes in the bar after the high is made with the divergence. So here it is. Similar, it's around the same time actually, but this one happens a little bit sooner. At least the high does, and we start selling off. So you have your divergence here on this high. Now you do have a divergence here, but the difference is it came right back with a bullish ratio in the next bar. Here you have the divergence, the selling divergence. The negative delta on the high, negative delta on the high here and here. But this time you've got the bearish ratio right after it. Here you have a bullish ratio after a sell divergence. That's not a good sign. I'm not going to say that it's a sign the market's going higher. I'm just saying it's not a sign to get short. Here you have the sign to get short. You've got the divergence, you've got the ratio afterwards, and then you sell off from the 29 area, all the way down to the 20s before you get the little bounce back up here. You come back up, sort of test the high, you get within a tick of the high, selling comes back in here, and we work our way down, and just again, like the 5 years, just sort of go sideways the rest of the session into the evening session. But again, there's two versions of it. One, there's the ratio and divergence in the same bar. Second version is the divergence and the ratio in the bar afterwards. This is the bonds. The previous one was the 5 years. And again, it happens just about every day in just about every market. I don't want to say it happens every day in every market, because then somebody will post a snarky comment saying, "Oh, it didn't happen today. You're a liar." I mean, come on. You got time to post. People got time to post snarky comments. They got time to learn how to trade. So where are we here? This is the Eurocurrency, and I want to talk about this. This was early in the day, pretty early. What the part that I want to talk about? Let me just find it here. 5 in the morning. Come down into this low here, right? You have a divergence. You don't have a ratio. You don't have a ratio in the bar afterwards. But what I like about this is, look at this volume that's showing up down here at this low. Okay, this is 5 in the morning. So keep that in mind when you're looking at the volume. Volume at 5 in the morning is going to be different than volume at 10 a.m. But this is heavy volume. It's telling me there's some support down here. 165, 113, 200, 204, 197. You even come down here, you test it again, less volume again. Here you got less volume than you got originally. I don't want to say it's less volume than here, but technically it is. Just this 23 versus 7. But this first bar here is telling me, there's some support down here. So we're testing it. And what happens? You can't get through it. And what happens is the market rallies. It rallies from, what is this level? The 84 level up to the 94. Actually 118 even. Delta scalper gives you a sell signal there. You sell off. You got the price rejector here. We do break through the price rejector level by a couple of ticks. Then we rally back up. Then you got a signal here with the delta scalper buy that didn't work out. Then you got the number came out at 9. Let me just look for something else, if there was any other signals in here. So again, you made a new low by a tick here. You got the divergence, but no ratio. Delta scalper gave you a sell here. This one didn't work out. This one here worked out a bit. Again, it wasn't the greatest move, but you're talking a move from 88 up to 98. So it's about 20 ticks in the Eurocurrency before you sold off again and going into the close. Crude oil. Let's take a look at crude. Honestly, I haven't looked at the crude today, so I'm kind of curious to see what it did. Well, what do we got here? This is the 8 range. This is the delta scalper. So I can see there were some signals here. The delta scalper gives us a nice sell from 50, 60 down to the 30 area. You got to buy. Then you got another sell here for, I don't know what that is, 15 ticks. A little buy here. So you had a big move early, just before 5. Actually, that's about the time I logged in, so I'm not sure if I got an accurate footprint chart at that time, but I'll pull it up anyway. Get it up. If I can find it. 8 range. Alrighty, here we go. Give me a sec. Let's go back here. Yeah. So, like I said, this move coming into these lows here, it just I turned on my system right around this time, 411. I know because the delta candles won't print if it's not receiving real-time data. But we start coming in here. You got this bar here. This was very interesting. You got all selling imbalances, pretty much the entire bar except for 2 price levels. Is this a stop being triggered, or is it a big seller? Sometimes it's hard to tell unless you're staring at the market and you can see it. I tend to think that it's a combination. You had a big seller coming in here because I know there was some decent buying here. You can see the volume. Where is it here? 1186. So, and then somebody else selling here, offering it down 692, 1044. So I know that there's sellers up there holding this market at this 32, 33 level. Some stuff gets triggered here and selling as well. And we just work our way down, down, down. I don't think I have the delta scalper on this chart anyway. But you get to this low, you got a divergence, no ratios right afterwards. So here's the delta scalper, gives us a little sell, not much. We sort of work our way down, from this, like I said, this 58, 60 area, down into some new lows down here at 30. Where you got this delta scalper giving you this buy. Unfortunately, we do make a new low by a couple of ticks right here, 4 ticks. Actually 3 ticks, 1, 2, 3. Then you work your way back up. You have this stack buying imbalance. It fails on you right away. Again, it's not good when you have a stack buying imbalance to get a red candle right afterwards. That's not what you want to see. You want to see a green candle. And then, in the next two bars, you spend that time underneath this. So, if you don't have a tight stop, like say below the low of this bar, and, you want to finesse it, so to speak, if you're still under it by the third bar, I said it's a buying imbalance, you should be trading up here for it to hold. Instead, you're trading beneath it in the third bar. Forget about it. It's not going to work out most likely. And you can see how we started trading down into some new lows down here. Here you have a divergence, no ratio. Next bar, 27.6. Is that a ratio? It's not. It's a ratio, but it's right on the borderline of what I like. I like something around 28 to 30. 27.6, again, you're splitting hairs. If you were to round up, it'd be 28. We don't have a rounding function, so this doesn't show up as 28, it shows up as 27.6. But again, do you want to take it or not is up to you. Some people will say yes, some people will say no. Next bar, you got the bullish ratio, 52.5. Here you got the delta surge kicking in. You can see the delta increasing, 123,637. So right, you're off your low. You've got strong buying coming in here. You can see it 972, 1028, 458, then 123, 637, 1116, and it's starting to pull away a little bit. You get a move from the 38 area all the way up to the 58 area. We got the delta scalper kicking in. Then you got a delta surge here as well. Just sort of goes sideways. Then you got the delta scalper giving a buy, sideways, going into the close and into the evening session. Okay, so soybeans, I'll talk about some of these grains really quick. There's been a lot of interest since I've been showing grain charts, actually. So this is soybeans. What do you got here at this low? You got divergence and a ratio. Boom, right on the low. What happens? We make a move from 958 all the way up to the 960s. Not the greatest of all moves. We start coming back down here. You got point control at the top. Come back down. You got a selling imbalance there. Another selling imbalance there. We make this new low. You got some support in here, 1123. 526, even down here you got the selling imbalance, 419, 213. Then you start to make this rally here. Here you have a divergence. You can't see it, it's off the chart here, but it's this arrow. This bar is actually very bullish. Again, I talk about this type of bar in my inner circle on why it's very bullish, and you can see how this market rallied up from there, from the 967.5 area back all the way up to the 960 area. You get this bar, it's kind of neutral. Then you work your way back down, and then we close for the session. But this is definitely a good opportunity here, and this is a decent opportunity here. Again, is it a big move? No, but it's a move, right? It's a move from 58 up to 60. It's 2 cents. That's a $100 move on one contract. It's equivalent to 2 points in the S&Ps. Okay, so this is wheat. I'll talk about wheat really quick since people are all still interested in grains. 8:30 is the reopen. Here you have some volume going through. You've got point control on the bottom. You got the ratio and divergence, but it's right on the open. Even here you have a delta scalper happening. This is 8:38. It's about 8 minutes after the open. Reopens at 8:30. I wouldn't take this trade here. This one I'd probably be interested in. It didn't work out. It made a new low. Delta surge comes in there. It's going back and forth. It's kind of a volatile opening this morning. First half hour of trading, you made the new low. You got some sell signals, some buy signals. I thought, here you got the delta scalper again, but then it runs right into a bearish ratio here with point of control at the top. Then you get down into this low. But again, this trade I would not take. This trade I'd probably be taking. Delta surge here. I'm more interested in buying than selling going into a low, so I probably wouldn't be taking that. Delta scalper again here, so delta scalper, these two I'd probably take. So I'd get stopped out on both of them. Then you got here delta scalper giving you a buy, and it just sort of goes sideways before you get the little bit of a rally up. But still not much happening in the wheat today. Kind of a tightish range since the open. Since the open. You're talking, what is that for? Well, 444. It's basically been your range down to 439.5. So a very tight range in the wheat this morning, or today rather. I'm not going to talk about corn because corn is, I think, kind of boring, but just really quick, go back to something that's moving a little bit. Aussie dollar. Again, Aussie dollar is one of those contracts. You don't, it doesn't, I said, unless you're Australian, you're probably not really interested in it. Okay, but what I want to show you is for people in my inner circle, they'll know this. I did a presentation. I gotta get it posted up today. But this bar here, very bearish bar. Here you have a 3 in a row as well, but this bar here, very bearish, and you get this nice quick sell-off here when the ISM came out. Obviously, Australia is a big commodity producing number, so you're going to get some movements, but this bar was very bearish. Again, just because I say it's very bearish, don't expect a 1,000-point move or anything like that. When I say very bearish, I mean it's an opportunity to get short. Again, the capacity of the trade is another story. It may be a lot, it may be a little, but just because I say this is very bearish, don't expect a huge move. To me, it's like, wow, that's a very bearish move. It's like if you okay, like say example, if you follow football, English Premier League soccer, as we call it in the US, but English Premier League football, right? And you got Manchester United up against QPR. You'd be very bullish on Manchester United. That doesn't mean Manchester United is going to beat QPR 30-0. No, they're happy to eke out a win, 1-0 or 2-1 or something like that. Just because you're very I say I'm very bearish on something doesn't mean it's going to be a monster move. It's just that I really like this setup, and we'll see how it develops over time. Obviously you start running down in here, you've got some signs of price rejection here in this bar, point of controls lining up, and you start working your way up. So by this point I'm off this already. So when I say I'm very bearish or very bullish, don't expect it to be, well, Mike said he's very bearish on this and you only got a small move. Well, the markets develop over the trading day, so things can change. But like this type of bar, occurring in a regular, setting is very bearish to me. That's the point I'm trying to make. And then again, in the evening session, again, this type of bar also very bearish for me as well. And, we sold off, then went into the evening session and sold off some more. Okay, so the S&Ps this morning, S&P is new high. So let's take a look at any of these trading opportunities. We'll talk about it mostly since the cash open. Since the cash open, we're trading near our lows. You got some delta scalper buys coming in here right off the low. And what happens is we get this nice rally from the 18.5 area all the way up to the highs, new highs. Now, you get up here, you got a bunch of stuff happening up here. What do you got? You got divergence, you got ratio. I just showed you in the bonds, same trade setup, ratio and divergence. Boom, trade it. Here you also got the delta scalper coming in the bar right off the high. And so you got two signals there. It's trading 24. Unfortunately, it just sort of goes sideways, trades down to 23, 22.5, and goes sideways before eventually getting the nice move down. Down here where you have this bullish bar with the point of control right at the bottom. You have ratio bounds low there. You get a little bit of a bounce up. Then you come down here, it's around 11. You got the swing low here. You got this delta scalper buy. You got some nice supportive volume in this bar afterwards, 4,000, 2,000, 1,800. At this point, it's all systems go. So you went from supportive buying in this bar to aggressive buying in these next bars here. And, delta scalper right here. Now, again, this is the beauty of the delta scalper. A question came in, well, what's a delta scalper based on? Well, it's based on reading the delta over certain periods and picking up changes, right? You're looking at this, here you got negative delta 498, 4,000, positive delta 900, negative 1,200, negative 2,400, minus 200, plus 800. That's why I have this delta scalper program, because if you're looking at this, you'd think it's bearish actually with all this delta, but you're starting to see changes in the delta coming in, and that's what the delta scalper does. It takes that form of analysis off your shoulders and does it for you. And it's giving you this buy signal here, and what happens? Boom, you get this beautiful signal. But again, even if I wasn't using delta scalper, you should be able to pick up the supportive buying here, and it turns to aggressive buying on the way back up. But again, from 25, 20.5, 21 area, all the way back up to the 25 area, to these new highs, these highs up here. Again, I don't think you'd be holding it going into the cash close, but after the cash close, boom, heavy volume goes through, make the new highs. So all in all, it was a pretty good day with order flow. A lot of nice signals, a lot of signals that you see happening all the time, and I said, and the Delta scalper, this is the beauty of it. Again, it's, if you're just looking at this, say you're just looking at this market like this, you're looking at it's mostly negative deltas in here. You might think this market's going down, but using a tool like the Delta scalper is going to pick it up that is changing on you. That is actually a buying opportunity rather than a selling opportunity. Okay, so thanks everyone for watching this. If you're interested in learning more about order flow and the trading software using this presentation, you can visit my website, orderflows.com, or if you want to learn more about the Delta Scalper, go to deltascalper.com. So thanks everyone. Have a great day. Bye-bye.